everybody, this is Ryan Mallon. We're going to do a stock market update right now. The S&P 500, it had kind of a big week. Why? Because it had its first multi-day sell-off since June 11th. The Nasdaq had its first multi-day sell-off since May 12th. That's 2.5 months. The Russell Index, no bueno, because it didn't have a multi-day sell-off. It actually rallied on Thursday, sold off on Friday. It hasn't had a multi-day sell-off since June 19th. So it's more than a month right now since its last multi-day sell-off. Why do I bring that up? Because it's the first time that we've seen from the S&P 500 and the Nasdaq, the market leaders, the ability to sustain a multi-day sell-off that had followed through the next day. So we come into a new week and it's going to be critical to see for the bears whether or not we can get that sell-off. Now I know I sound a little bit bearish, but why am I saying all this? Is because it's important for the market to have from time to time pullbacks of some type to be able to relieve the pressure, to provide good trading setups going forward, to be able to maximize your reward to risk that you take on every trade. Because right now, the reward to risk is not a very good ratio. You take some of these stocks, maybe you can make $1 for every $2 that you risk. It's just not there right now. And that's why we're seeing a lot of sideways price action, because the value in stocks is just not there at the moment. And so you're seeing fewer and fewer stocks rally every time the market rallies, and you're seeing more and more stocks sell off. In fact, more than 90% of the stocks in the S&P 500 really haven't gone anywhere since April. It's a crazy thought, but what you're seeing is your FANG stocks and your big mega market caps be the ones that are rallying the stock market higher on a daily basis. That's why the Nasdaq is so much bigger, is because your mega cap stocks like your Facebook, your Amazon, your Apple, your Netflix, your Microsoft, your Google, they're the ones that are pushing the stock market higher. Looking at the daily chart of the S&P 500, you have a huge gap up that took place on April 6th. The lows of that April 6th gap up seems to be what's guiding this market right now. You have a nice trend line going right off of those lows, and it has yet to test it. However, what you're starting to see pop up in a lot of the indices is a double top pattern. Yes, the recent highs on the S&P 500 is higher than the previous highs. To the eye, it's not really that noticeable. So there is the potential there, especially when you combine it with the Nasdaq chart that has a clear double top pattern to it right now. So you have this neckline on the Nasdaq. If it breaks that neckline, it's going to probably break a lot lower, test the 50, maybe even the 200-day moving average. Also worth noting is the fact that we closed below the 20-day moving average. We did that one time before, back on June 26th, but the next day it was quickly bought up. Now Monday, which tends to be a very bullish day for the stock market, is going to be very key for the Nasdaq. Can it rally and recapture that 20-day moving average? The previous time it did, and beyond that day on June 26th, there's not been a single breach that saw a close below the 20-day moving average going back to April 3rd. So this has been a very, very strong support level. Now there is some price level support that you want to be aware of too, because that's where the lows of the Nasdaq hit on Friday, going all the way back to February. You draw a line across and you got this very nice price level support. So there is a very good chance that it could bounce on Monday and hold that support level, recapture the 20-day moving average, and continue to push to new all-time highs again. Also, what's interesting is that the Nasdaq closed lower for a second straight week, something that it hasn't done since May. And then also on that same day that it closed lower for a second straight week, also closed lower for a second straight day for the first time since May 12th. And by the way, while I have your attention, do me a huge favor and like and subscribe to this video here. I'm putting out two to three videos every week, or at least I'm trying to get to that third. Your support will continue to help me to put some of these great videos out there that provides my technical analysis and trade setup. So make sure to like this video and subscribe down below. But you also look at the Nasdaq price action from the last 2 weeks. It's lower the last 2 weeks. And we have to ask ourselves, are we setting ourselves up for a bigger pullback here? Because the weekly chart is extremely overextended. It's well over 80 on the stochastics. It has spent most of its time over 90, and now it's starting to curve lower. So there's some concern here because it's the most overbought index, and it's also seeing the most selling pressure of late. And that selling pressure has resulted in a rotation out of tech and into small caps. And if you look at the daily chart of the Russell, it wasn't as bearish as the other indices were the last 2 days. In fact, on Thursday, it finished higher. And when you look at the Russell weekly chart, you're going to see there's a lot of price resistance right there going back to 2019. So it could very well struggle. You see the candle that it formed on Friday, that's like a shooting star candle pattern. It often tends to be bearish. It's going to struggle at this level here. If IWM can get back above 160, which is a tall order, it's almost a 10% move, then maybe it has a chance to push towards its February highs. But right now, I would not have put a lot of confidence in the small caps, especially when most of this market bounce has happened as a result of the large mega cap stocks rallying like your FANG stocks. Now going back to the Russell daily chart here, look at the 200-day moving average. There's been multiple occasions where it's tested this level and has created somewhat of a bounce or some resistance, depending on what side of the 200-day moving average it was on. It's worth noting, it's worth paying attention to, because the 200-day moving average is flatlined, okay? There's no trend in the 200-day right now. In fact, you could say it's slightly trending lower. Nonetheless, the 200-day moving average seems to have this magnetic influence over the price action on the Russell 2000, so it keeps coming back to this level here. But if that ever changes, if we see a break below the 50-day moving average, then things will have clearly changed. And on a price level basis, watch the trend line off of the March lows. You have a little bit of a rising support level that it's getting close to testing that's converging with the 200-day moving average. It's sitting at 144.50 right now, but as the week unfolds, you're going to see a little bit more of a testing of that rising trend line. Now, next week has the opportunity for a ton of craziness. First of all, you got the stimulus package that Congress is working on. You're going to see headlines about this every single day. It's going to move the markets for better or for worse if they start stalling on it, if they can't reach an agreement. And right now, they're nowhere close to reaching an agreement. You have Republicans, they want about $1 trillion. You have the Democrats, they want about $3.5 trillion. And you have the potential for a filibuster in the Senate. So there's no guarantees that we're going to get a deal next week or anytime soon. You also have huge earnings on July 30th. You have Amazon, Apple, and Google reporting, as well as MasterCard. So let's say all of these companies miss. I don't think it's likely, but let's say a majority of them miss. You're going to see a lot of fireworks to the downside. You also had the Federal Reserve releasing their FOMC statement on Wednesday at 2 p.m., followed by a pressure at 2:30 p.m. That always creates fireworks. The last time they met, it created a lot of fireworks, especially the next day. In fact, the last time we had a significant sell-off was the day after the FOMC statement came out back on June 11th. The S&P 500 dropped 188 points. So let's be careful as we approach the FOMC statement here. There's the possibility for more stimulus, that another program that they're going to roll out. However, we know what happened last time. We have to be on guard for that. Now let's pull up the SPY chart here, because going back to June, I have been talking about this box pattern. We broke out of it earlier this week. All looked good, but guess what happened on Thursday and Friday? We went right back down below it. Weekly chart doesn't look that great. We tried to get into the gap from February. It couldn't run into that gap at all. Instead, it faded back below the gap, back into the box, and it provides us with a shooting star candle pattern here. So I'm not crazy about this chart right now to be getting long on a lot of stocks. In fact, if anything, I'm wanting to raise my stop losses on existing positions, take maybe a little bit of a short position to hedge my portfolio. Now on the monthly chart, S&P 500 looks fine. It's having a good month. It started the month at 3,100. It's currently at 3,215. But with the fireworks that are scheduled for this week, if anything goes wrong, that could quickly go from a very bullish month to a bearish month. It takes about 115 points for this thing to go red, and it would be a very nasty candle as a result, likely leading to more selling pressures in August. Now let's take a look at the Tesla stock, because I know there's a lot of emotion surrounding it. I have friends that have done a really good job trading this. I have one friend that he's been in this thing since it was in the 200s and 300s. He's making a lot of money. Proud of that guy. However, it's dropped 20% off of its highs, 21 to be exact. And what does that mean? It means it's in bear market territory now, believe it or not. I wouldn't put too much weight on that. What I would look at is where could it bounce at? The 20-day moving average, which it tested on Friday, it held it. So that's actually a good thing. Can it hold it going forward here? It's bounced every time off of it, going all the way back to April. So that's a good sign. But if it doesn't bounce, then that's where you need to start getting concerned and maybe start booking some profit here. Doesn't mean that you can't get back into it in the future if the right situation arises, or if it can make a nice little comeback here. That's great. But be concerned if it breaks the 20-day moving average, because that would be a fundamental shift in how the stock has acted in the last 3-4 months. Now check out this price level support in Tesla, because if it goes back to the February highs, there's a nice level of price support. So if it does break that 20-day moving average, start looking at that like 1060 level to get long again. And look, the Tesla lovers are going to hate me for saying that, but get over it, guys. This is the stock market. I own a Tesla. I love Tesla, but I'm not going to let my emotions be managed by the fact that I love the company. I love the product. The stock and the product are two different things in my mind. I'm looking at the charts, not the fancy car. I'm not going to talk about silver in this video, even though it had an incredible run, because I just did one a couple of days ago on silver. So go back and look at my video on silver. You'll see exactly what I'm talking about, what I'm trying to do in that stock. We did that trade in the trading block. We sold the last part of that trade for about 16%. It was a great trade, but gold is doing a similar parabolic action, not to the same extent as silver is doing it, but let's watch this one, because if I'm going to get long on it, I want to do it off of the rising trend line from the March lows. The rising trend line off of the March lows gives me a nice entry around 169 to 170. So if it pulls back to that level, that's where I would be targeting to get long. Ultimately, I do think gold goes higher, but what is one of the most overlooked aspects of trading is the entry price, and people overlook the entry price because they get caught up in FOMO, the fear of missing out. And when they get caught up in the fear of missing out, the entry price doesn't become important, but the entry price is what determines your risk and reward. So you want to get a good entry price in order to have a good risk reward, because that's about discipline. It's about guaranteeing that you maintain a consistency in your trading approach to always get low risk, high reward trading opportunities. And if you're able to get into GLD at one of those prices, then I would probably put my stop loss below the June 26 lows, which would be around 164, which has has some price level support there in the short term. Now, Draftkings is important because you have a lot more sports coming on now. You got the Major League Baseball and the Houston Astros making another World Series run. Let's be honest, they didn't cheat. That's just all the haters not liking them. Draftkings could become in play here. You have a nice little 6-day consolidation pattern here. There's a good chance that it wants to run. However, you have a little bit of resistance overhead. I'm not sure it can break through it or not. It's going to be a wait and see kind of approach, but there's still an opportunity to make plus 10% on the trade before you even test the resistance. So if I'm getting long on DraftKings, I'm probably looking at a entry price above $38 with a stop loss that would include a close below the 10-day moving average. If it closes below the 10-day moving average, I don't want to be in it anymore. Then that would effectively mean that it's not going to follow the trend line underneath and it's going to head fake on the breakout above. Guys, Netflix, I traded this past week. Didn't make any money off of it. Guys, Netflix, I actually took a loss on it this week. 4% loss. Rising trend line off of the March lows, though, is actually back in play here. So maybe there's a chance I get back into this one this week. If you like this trend line, that's where you want to get in at current price. As for a stop loss on Netflix, watch this 50-day moving average because there is some support there. It hasn't quite tested it yet on the pullback. Maybe it does next week, but so far it's holding that trend line. If it breaks and closes below the 50-day moving average, that's where I would get out at. And finally, to provide you with a short set because bears are people too, check out this head and shoulders pattern that's emerging in CRM. You got a nice, well-defined textbook head and shoulders pattern. Hasn't broke it yet. In fact, it may bounce and go to new all-time highs again. Who knows? But until it breaks that neckline, you got to be patient on this trade. I wouldn't get into it now. I would wait for it to break that neckline, and then that's where I would get into my short position at. And again, any short position is going to need the help of the market. So if the market's going gangbusters higher, the CRM is probably not going to work. So remember, you have some really big things coming up this week. You have massive earnings reports this week and next week, but particularly this week because you got the big mega stocks reporting that essentially control and monopolize the market. You also have the FOMC. Are they going to provide a new stimulus plan or not? Is Congress, are they going to agree to a stimulus plan or not? There's a lot on the table here, so you got to be ready to constantly switch your opinion on where you see the stock market going, and if you can do that, I think you're going to be fine. If you enjoyed this video, make sure to like, and not only just like, but subscribe to down below because you'll get notified when I post these new videos. I try to pack as much information for you in a 10-minute video, so I'm not wasting your time. I never want to waste your time. I try to make sure that every second of this video is worth it to you. So make sure to like, subscribe, and you'll get notified when I do these new videos. Tell me in the comments below too, whether you think this stock market's going to hit new all-time highs or not. Because right now we're seeing a little bit of a sluggishness out of the stock market in recent weeks. Does that mean that we're at the top now and we're going to start trending lower, or do you think we just are cooling off right now before we blaze to new all-time highs? Tell me in the comments below. Thank you and God bless.